With current volatility in the market, what can investors expect? To talk more on this, we have here with us Sunil Singhania, who's the founder of Abakkus Asset Managers. Hello, sir. Pleasure to have you here.
Same here, thank you.
Sir, I want to start by asking you that what realistic expectations can investor keep at this time in the current markets with volatility around?
So one is, we all talk about volatility, but volatility is the essence of markets. I think every day is going to be volatile. It has been in the past and it is going to be in the future. Having said that, I think we are lucky that we are in this country, which has the fastest growth in the entire world. And even when the world is struggling to grow at 0%, we are growing at 6.5, 7%. And looking at that, I think our view is that this $4 trillion economy, which we have achieved after 77, 78 years of independence, is going to double to 8 trillion in the next 7, 8 years. And I think if we are looking at that, and if everyone believes what we believe in, then the corporate profit will grow at 10 to 15%. And I think those 12, 15% kind of returns is what we are expecting going forward year after year.
With current risks, do you see a major correction in the coming years? In the coming year?
I think we have already had a minor correction of 10, 12%. And if you go back every year, you will have 2 or 3 times and the markets will correct by 10, 12%. As I said, that is the essence of the market. But we don't see a crash. So if you see a crash has happened in the market only when there are events which we have not anticipated, like COVID kind of events or like Lehman Brothers kind of event. At this point of time, even geopolitical situation in the world seems to be sort of stabilizing. We have already had a ceasefire with Israel and Hezbollah. Hopefully, as we move forward, even the small skirmishes which we are seeing in the world will stabilize. So unless there is some major geopolitical event, we don't see the markets crashing per se.
With Trump coming to power and China sort of having the tariff pressure on it, do you see that situation will benefit India, or would we be the biggest beneficiary of it?
So, let me put a disclaimer. I've always been positive India and I continue to be positive India. I think India benefits from 3 ways. One is we have a huge demographic advantage. So our domestic demand, without relying on the world, grows at 6, 7, 8%. Then you have the second growth driver, which is import substitution. So right now, everything we are consuming, even on the electronic side, was being imported. Now with this Make in India, the PLI scheme, even Apple is manufacturing phones here. So the second leg of growth will be import substitution. And the third leg is what you said, the world is slowly getting a little bit scared of China. There are, anti-dumping duties being imposed by China across the world. And whether it is Trump or someone else, I think it's very natural that the world wants to, move away a little bit from China, and that India should definitely benefit along with a lot of other countries.
With the recent FII inflows, do you feel that foreign investors are sort of, doubtful on India, or it's just a phase and it'll just go away?
So if you again look at the world, where do you invest? You have US, which obviously is doing well, but other than US, where do you invest? The Europe, the whole region is not growing. Russia is a no touch. China, again, people are scared because, it's not a democracy in per se. The rest of the world, there's hardly any growth and any size. So I think it is very natural that a country of India's size, which is almost 1/6 of the world population, already a $4 trillion economy, and with expectation of it becoming the third largest economy in the next 10, 12 years, I think any investor who does not invest in India would be doing it at his or her own risk.
Which are the sectors you're bullish on at the current time? Like the prices are low and you can just go for it.
So, I can give you some sectors, but obviously, from our perspective, we are more stock specific. And wherever the earnings growth is good, I think stocks have done well. But having said that, I think we continue to be positive on the banking side. I think the sector has underperformed, but the banks have done reasonably well. There is no NPA, and with hopefully the credit growth coming in, they should benefit. I think capital goods, infrastructure again should be up there. Again, the government is focusing a lot on creating more airports, more roads, power for all, water for all. So you have the Jal, program and the rooftop solar program and all. So I think those should benefit. And I think one segment which has not benefited so far has been the discretionary consumption. Consumption generally has been slow. Our view is that in the next 6, 8 months, that should pick up.
And overheated sectors in your view?
I think, as I mentioned, even in the presentation which I gave, there are some themes which are good, but where the valuations are very stretched. And I think that would include the defense of the world and the railways of the world and a lot of these sectors where the potential is good, but the prices are like through the roof.
My last question to you is that one advice that you think you should have, in your younger days, one mistake which you did, which you feel that somebody should have told me that not to do that in your journey.
Only
Or
investment related.
any advice is welcome from you.
No, I think, see, in hindsight, we are all very, intelligent. So there are a lot of mistakes which you have done. I think the biggest, I would say, is selling stocks early, because we never take into account what can happen after 10 years, after 15 years, and I think that has led to more maturity. So it's not only about what is going to happen in the next 2-3 months, which unfortunately 99% of your viewers would be interested, but also in seeing what can happen to this country in the next 5-10 years, and as a result of which, what can happen to the equity market. So I wish I would have taken some more longer term decisions at that point of time, and it would have made me do much better than what I have already done.
Thank you so much for those insights. Thank you, sir.
If you like the video, do like, comment, share and subscribe.